wanted to check in on some currency correlations.
That's great.
We've got the 3-month correlation, so now we're looking kind of at that post-election era.
And why did you pick 3 months? Why didn't you do a week? Why didn't you do a year?
Yeah, so 3 months gives us a lot of data, which is good, especially when you're comparing asset classes. A lot of these things don't have to move in tandem, so 3 months is a good amount of time while still being pretty relevant and staying in, kind of the news cycle or what have you. But right here we've got cross asset. I've kind of chopped it up a little bit so we can just see. We've got U.S. stocks, gold, crude, and the U.S. 10-year note. And then we've got this list of major U.S. dollar pairs.
Wow.
Yeah, a lot to look at, but a lot to kind of unpack. And this is always a fun exercise when I print this gigantic block of colors and numbers to try and just see what's interesting. To me, I mean, your eyes go first to this dollar-yen rate correlation with U.S. rates. We've talked about that before. That kind of story we know, but what I was surprised is that you also see that in dollar Swiss franc.
And why do you think those, again, when we talk about statistically significant, when we look at 0.06 or 0.17, there's not a lot to it. Anything over 0.3 starts, again, you want markets to ebb and flow, and rarely do you get perfect correlations. If you do, it's like SPY against ES. It's because they're the same product, just in a different suit. But here, these are significant correlations. Why do you think Swiss and yen are so different than when we look at euro, cable, or anything else?
Yeah, and I mean, I think that goes back to the traditional safe haven kind of removed from some other political news.
Okay.
And so then you just kind of get those rate projections playing through. As we know, U.S. dollars also a safe haven. And so what's going to move these, if they're all safe haven assets, what's going to move them? Maybe it is just the rate differential and the future projections of perhaps the carry trade or what have you, which is so popular in that dollar yen.
So within all the currency pairs in the dollar, who has the greatest rate difference? Which currencies have the greatest rate differentials?
Yeah, so right now it would still be the U.S. dollar and the Japanese yen. That, of course, is converging with the recent hike. But again,
they're laboring over going from 25 to either 40 or 50 basis points.
Yep.
We're at 4%.
And the scope as well is that we factored in a cutting cycle that was aggressive. Now it looks like we might stay at a big gap against them for however long.
Right.
At least June, recent projections.
And you're spot on. So both the Swiss and the yen had the greatest nominal rate divergence. In other words, the Swiss rates are awfully low too from U.S. rates, where, well, sterling rates and euro rates are under U.S. rates by a much smaller margin. So the true widest spread between those two countries are Swiss and yen, which would make sense why it's so correlated to the 10-year. So it's a great piece. What else do you find interesting within this?
Yeah, I mean, obviously, everyone's interested in, is the dollar correlated to U.S. stocks?
Right.
And so when we're looking here, euro dollar seems to be the best proxy among dollar pairs for U.S. stocks. Euro strength positively correlated with.
I wouldn't have thought that number was so strong. That's interesting.
Yeah, but a good caveat that you brought up as well, 0.336, not the strongest with the range of -1 to 1. And yeah, those are my main takeaways. I was looking for something good in crude.
There is something good in the crude, though, because old school was and one of the things they talked about is the tariffs in Canada are going to affect crude because we import a lot from them and we export a lot of byproducts and everything else. But in the old story was, if crude was up, it would help Canada a little bit. And same thing with gold and Aussie. Old school thinking was. Takeaway from this is you look at gold and Aussie, there's nothing to be had.
It's a much bigger story.
You look at crude in Canada, there is nothing to be had with it right now. So the idea that crude's up $2, so I don't mind being short some dollar Canada, that might help that cause. Not the case right now. So we know the backstory. We get the logic around the trade relation. But I'm more inclined to trust the numbers, and just the numbers tell me I'm not helping myself by selling dollar Canada or being long Canadian dollars on an up crude day. It's not driving the relationship.
Just because of that. Yeah, and it's important to monitor because over the long term, the story could come back. And but we're looking
but
at
right now it's not. And,
exactly.
and I'm willing to accept fact rather than, well, I can't tell you how many times I've heard, well, it should be here. It's like, yeah, well,
Then what?
Yeah, we're going back to Santa's wish list.
Yeah, so some interesting things here. And then I also wanted to point out just some correlation among dollar pairs. This a lot richer, a lot to look at. And you have to be a little more careful unpacking it because we have dollar in the quote currency, dollar in the base currency. Right. And so you're playing the dollar on both sides here. But what was really interesting to me, first off, we've got Australian dollar, New Zealand dollar, 0.94 correlation. Yeah. Really close to just moving one for one, which we knew, but in the same line as the crude story, this is a confirmation, right?
And we just looked at over the last 3 days. Aussie's up 3%, Kiwi's up 2.3%.
Yeah.
Was it 2.8?
Yeah.
Oh, so it was closer than we thought. Okay, sorry.
And so it's good to have a little number check there. What else? One thing I thought was interesting among European currencies, you've got Euro USD very negatively correlated to dollar Swiss franc, which makes sense. Both European currencies and this in dollar on both sides, but
that negative being important, again, that doesn't mean they're not related.
Right.
It means because one has a different quote base currency, the quote base currency, the dollar component of that currency pair is flipped. Correct. So if we normalized it and made it Euro USD and then Swiss USD, that'd be a positive 0.83 correlation.
Right. So, thank you. But interestingly, the pound against the dollar and dollar Swiss franc, a lot less. So we're seeing, my takeaway from that is pound dollar maybe has a little more of its own narrative going on.
Absolutely.
Than just a bigger than European currency.
And what about these
story.
yen correlations?
That's also a big call out. Not really as correlated to anything as some of these other pairs are. Pretty interesting to me that, you're seeing the lowest correlation on this matrix against dollar CAD and dollar yen. So when you're thinking about all the Canadian dollar storylines, if you're trading dollar yen, maybe not little to nothing to do with any of that US dollar, Canadian dollar movement. What are you looking at?
I think you're spot on. You summed it up perfectly. For the correlations with currency pairs, we look at what's great with SpotFX is I don't have to go out and build Aussie yen. It's a pair I could trade. I don't have to wait one, wait the other, the way you would build them in futures, which could be challenging and you left with tail risk and a lot of margin. Here you can just go and trade the pair. What this is telling me is that Aussie yen, when we look at pairs and look at some of these correlations, some of these pairs have a natural reversion aspect to them. So the non-dollar pairs have a reversion. So if they tend to get wide, we can find a trading opportunity here.
Interesting.
Aussie yen, it's not statistically, it's not. It could be wide, it could be narrow. It doesn't necessarily statistically revert. Yen Canada is a pair that some people I know look at too. No correlation. So in other words, if it's at an extreme, well, that's interesting because the pairs revert. No, they don't. So the takeaway is yen's its own animal. Non-dollar crosses, there are much better places to look at here, and this is great. Are you going to have this someplace where people can download it?
Yeah, I'll post this on our socials.
Great. So guys, if you want to dig into this and kind of pull this out and print a roadmap, this is a great thing when you're looking at the core pairs as well as divergence in some of the cross pairs, because we're starting to see that now, and that's really interesting. Where is there, again, you can never have divergence and correlation. The more something diverts, the less it's correlated.
Right.
But you accept the fact that if it goes from 0.7 correlation down to 0.55, it means chances are that divergence has taken place. If you like the idea of reversion, that's an interesting trade where the whatever pair you put against the yen, you're creating a trade that doesn't have any natural reversion aspect to it. So lots to unpack here. Good stuff, Glenn. Thanks so much for putting them together.